Hey, welcome everyone to another episode of Finance Village. I am your host, Sheldon Bro, and of course, my co-host, Sean Adeyemi. And in today's episode, we are going to be diving into the critical issue, more critical than ever, of secured communication in financial services. With the SEC tightening its regulations and all regulators doing so, there has been almost $400 million in fines that have been passed out to institutions for off-channel communications. And Sean, we're going to get into it by just quickly highlighting my own experience over the last decade is even when I was in the large institutions, they are always trying to push out these cute little portals, these secure logins. I think it was, almost 12 years ago at one of the large banks that I worked at, they would say the clients are not allowed to email you documents anymore. They have to send it through this secured portal. They were trying to get clients to create a login for a portal just for a moment in time to send mortgage documents, something that wouldn't really have any great utility going forward. No clients were interested in signing up for it. And eventually, all of the reps in that mortgage department abandoned trying to do it because it was totally pointless, and clients continued to send it through email. So breaking client habits is not an easy thing to do. There's a number of ways that this can be kind of tackled through, obviously, new kinds of technology that are out. But what has been your experience historically, Sean, in communicating with clients and trying to kind of drive certain behavior with them in protecting the security of the exchange that we have with clients in the financial industry?
I think if we're being honest, most advisors are using any combination of WhatsApp, um, text messaging, Signal, and any of the myriad of apps out there. Um, and I don't particularly like any one of them because in terms of the security and stuff, especially if it's on your mobile phone, it can pose threat. You often hear in the cyber world that the biggest threat sometimes is not the system itself, it's the end user.
So let's go through the basic different levels. First, there is the levels of what are we exchanging with clients? Well, we're exchanging conversations. They may ask us different questions, divulge different data points to us, and then there's
Hmm.
documentation.
Right.
And then there's also looking at the basics of there's enterprise. Enterprise wants to have that ultimate overarching control, if you will. They want to have that purview. They want to have the insight as to the communications that are happening. There's I guess, the brokerages, the MGA, the dealer, the mortgage brokerage. That's kind of the enterprise level access that they want to have some level of compliance, insight, and control. Then there's the advisor, and then there's the client side. And you want to make it as easy as possible for each. Right now, I would suggest to you that, that obviously the financial advisor space, insurance, investments, financial planner are getting more scrutiny, and the mortgage industry and the real estate industry and all of these other professionals is a little bit more loosey goosey, if you will, in my experience. Where
I mean, if we tackle it from different levels, if we tackle it first, I guess the most important one really is the client communication. There's the other levels you mentioned, which is advisors with the different brokerages and MGAs or whatnot they work. There's that. But if we tackle it first and just focus on the client, I think the idea of exporting is inefficient at most. It's you're not going to stay consistent as your client base grows. You're not going to take a screenshot every single for 1,000 messages you did before. Like that's not realistic. I know there are solutions out there that integrate whether that's text messaging, WhatsApp, whatever medium you use to communicate. They integrate it with your CRM. So one of the things that we explored at one point, but couldn't quite come to a conclusion because there were just too many gaps, was the idea of syncing some of this messaging apps into your CRM so that at least the conversation is there. But the gap still remains that if they're on your phone, they're vulnerable. And so I guess my question then is what solution do advisors of mortgage professionals have that can stay consistent compliance without necessarily breaking the client's habit?
Well, and that's the thing, is that there's different layers to that conversation, where then again, even if you're looking for a way to bridge that conversation over to the CRM, again, that involves bringing in a third party. Those non-compliant communication platforms, they're talking about personal texting apps, WhatsApp, the Signal, whatever else. It's ideally we want to be able to achieve three goals, I think, and correct me if I'm missing any here, but it's enterprise needs an overview of what's happening with the totality of the communications with clients.
Mm-hmm.
The advisor wants, the financial professional wants to be able to communicate with the end client in a way that's secure and they can direct message them. And then there's having those Slack like groups where now, if there's a professional team, you can either look at it as a financial planning journey, or you could look at it as a product transaction. Maybe we're doing a mortgage transaction and we
Mm-hmm.
want to get the realtor, the mortgage advisor, the lawyer, even for a moment in time, potentially even the appraiser and the client all in that one spot. And then oftentimes also being able to only message just the realtor or just the client.
I think, well, I guess my question then is, I'm not, I am a big fan of pocket finance, obviously, as you know it. We're working on some great things to integrate with our practice, which you're a part of, is ensuring that the app has great utility on so many levels. So they're not simply just logging in there to chat with you or to send you documents. They're logging in there regularly because it has their bank connections. They can track their budget. They can track their expenses. They get notifications. Pocket Finance already does this anyways. They get notifications by the time they sync in their credit cards, bank accounts, and all the different financial, so, I guess, institutions they use in one place. They will get notification when bills are due. Okay, so this bill is due. Rather than imagine trying to track 4 credit cards and the due dates for those credit cards. But once you sync them into Pocket Finance, and I don't mean to go on this rabbit trail with Pocket Finance, but I'm really trying to highlight something that is really crucial for client adoption here that Pocket Finance tackles very
It's
well.
the carrots.
Right? Is having all this credit cards, all this bank payments, all these bills synced into one app. So the client gets the reminder, this bill is due, and they're all coming from different places, but it's in one place. And so now imagine in that secure place, they get all that information, they're able to track their budget, their expenses, they're able to see these different segments of how they're spending their money. But then they're also able to chat with their professional on there. They're able to send them documents. They're able to say, okay, we're working on a mortgage application. We're working on a financial plan. We're working on all of this. So that's the best case use for that because they are using that tool regularly. And so the idea of being able to communicate with them within that channel is you're creating a habit, but you're also working alongside things they're already using and putting into one unified space, which is what one of the things Pocket Finance tackles quite well, in my opinion.
So that's an example of like a carrot. So a lot of people are doing aggregation now, where you can connect all the accounts in one place. Bringing a carrot, so being able to change people's habits. Right now we send out email drips. We're sending out the little newsletter or the birthday thing or whatever else. And that has created something where now you've built that habit that the client understands that this is where they are to communicate. The credit score that came out with Credit Karma and Borrowell was a carrot to bring people in to sell them stuff. One of the things in Pocket Finance is giving the monthly update of the market value of the home. And you're bringing people in and reminding them this is where your financial advice is, this is where you'll communicate. But it still will take a very long time and a lot of carrots to continue to break the client's habit. So, one of the things that is being explored, that has been explored by many large institutions, that Pocket Finance is trying to bring not just to the financial advisors, but to all of the different financial professionals, which is what makes it really special, is the ability to have a place where all of the professionals can communicate in one place, not just a real estate person and their client, not just a mortgage advisor and their client, not just an investment advisor and their client, because that becomes, again, that siloed problem of now I'm communicating with all these different people in all these different places. And that's where I think it really becomes meaningful, where you're able to have all your financial advice in the one place, because you, as a financial planner and a mortgage person, can be communicating in a WhatsApp, um, if you wanted to take that kind of risk in that direction. But then you have all these different people choosing to use all these different methods. So one of the things that has been a big opportunity is something called Federation Communications. We're working on partnership and integration with this in Pocket Finance right now, where you're able to allow clients to continue to interact where they are on their phone, SMS, WeChat, Line, WhatsApp, and there becomes this one central truth for the financial professionals to be able to become compliant overnight by having that one portal within the website on the Pocket Finance side where they're able to have all of their communications show up in one place. Can there not be a better experience where me as a mortgage broker or as an insurance advisor that wants to find out where's the best place to put this business? Can you, or even if I just want that BDM to connect me with one of those complex deal specialists to be able
Right.
to figure that out. What does that communication world look like right now on that level of communication where somebody wants to get some assistance from their MGA or their mortgage brokerage? What does that look like in your current experience today?
It's a wild, wild west in the sense that it's highly inefficient. You're reaching out to BDMs by email, you're getting responses a week later because they also inundated with requests from advisors or like myself. Um, I think that the same kind of system where we have in Slack, where teams are able to communicate with um, other parts of their businesses, is what we need in the financial space as well. A place or hub where it's adoptable regardless of the vertical you have in your business, whether or what specific part of the industry you're a part of. So that's whether that's accounting, whether that's mortgage, whether that's investments, whether that's insurance, whether that's life insurance, home insurance, you name it, a place where enterprises can sign on to and through that platform kind of communicate with advisors like myself. And then advisors can also in turn use those to communicate with client because there will be sub channels for industry professionals and then sub channels for clients where clients can use the current communication system they use and it all syncs at once. I know that sounds like a utopia, but I think the that's the roadmap that I think makes sense for the industry and for the client.
So if you got a client right now and you're looking to reach out, so on the mortgage side, you've got your mortgage brokerage. This may be the Dominion Lendings or the Pineapples or Bricks or all these different brokerages, but you're not reaching out to the brokerage. You're reaching out to the lender's BDM. So you may have, how many different lenders might you be looking to, send a message? I guess ultimately you're sending a bulk email. You don't always need to send this kind of confidential information. You generally can give like an anonymous kind of overview of the
Right,
file.
right.
Some eventually they may ask you for file numbers or client names or other stuff like that. Not really ideal through email. So you've got 40 different places they could be changing their who the BDM is that you're not necessarily getting that real time. Where is that directory that you're usually able to find? And even you're dealing with multiple MGAs sometimes as an insurance advisor. But let's just take the mortgage example. Um, of all of these different places that you need to reach out to, where are you going to get the information for the BDM to find out who it is? And then is it always through email or are you doing text message to them as well sometimes or calling them?
Both. We're doing actually all three. We're getting the contact information from Lendesk. Then you're calling them, you're sending them a text, or you're sending them an email. Highly inefficient, but that's the only way that works right now. Is you're doing all three, especially if there's urgency to the file that you're working on. On the insurance side, very same thing. Yeah, yes, we have our quoting softwares, and that gives you ideas of premiums and all of that. But when you're working on complex cases, that has a lot more nuance, especially when it comes to the permanent insurance for business owners. You're looking at the different variables to try to figure out what works. Um, and you're reaching out to the BDMs directly by email, by text, by your phone, getting on the call with them, you're getting on Zoom with them. Once again, highly inefficient. And that's the same system right across every vertical in my business.
Does the insurance side have a directory like the Lendesk that tries to stay as up to date as possible?
Some MGAs kind of do a better job at keeping all this information in one place. Some MGAs do a terrible job of it. You just gotta go and find out who is my BDM, send an email to your MGA, and your MGA will let you know this is who the BDM is.
So I guess one thing I'm thinking about while you're saying this, because even when I'm reaching out, like how much purview does the enterprise have on even what types of interactions that their BDMs and their regional managers explain for us quickly, Sean, what is the role of a BDM with a mortgage firm, with an MGA, that person that's at that regional level that you have access to contact to? What is the ultimate defining role of their job? What is the purpose of their role in your mind?
I think the purpose of their role is to explain the products their company for the companies are representing and to see how it fits with your client and what you're trying to accomplish, whether that's mortgage, whether that's insurance.
So ultimately, they're there to help promote and sell lots more of the product to
Correct.
the people that are trying to position it to their clients, simplify the way that they're going to communicate that. And I guess you've got a level of different kinds of resources that you can typically have available from the MGA or from the lender that will help them understand the benefits of the product. But usually it's ultimately left up to the communication that you will translate over to the client through text or through email or through a video call or through a phone call, integration with the compliance monitoring tools. But what is the real value of the relationship? How many interactions is this BDM, this MGA having with all of their advisors? Let's say as a percentage of the total number of advisors that they have versus this one. It doesn't matter if they have the same number of advisors, you can still come out with the same kind of communication statistics, if you will, and seeing the value of those relationships and how much activity are they actually having. There's a limited amount you can have of that through email, I suppose, that they could figure out a way to track that. But then there's the phone calls, there's the texts, there's the, sending you
Exactly.
resources and everything else.
So the only I can't speak for the enterprises or the bigger firms. The only way you can really track any data is email, right? For us with the CRM that we have, we're able to because we segment it from these are our client contacts and these are the BDMs we work with, all within the same CRM. And so if I'm sending email and the CRM is synced with my email so that any emails I send, whether that's to the BDM or to a client, is all tracked. And because each service provider, so Equitable, National Bank, you name it, has their contact within the CRM, they have the email for the contact person within the CRM. So I can easily go to a service provider, click on the email, and I can see all the email threads I've sent to that specific firm.
Okay, so I'm going to say there's two big sides of the coin to this conversation. There's the SEC crackdown and the regulator crackdown on communication compliance. There's, having the transparency, the data retention, auditability in that financial services sector, and just not avoiding huge fines of having that off-channel kind of mess of all the places people are communicating in a way that they shouldn't. So that's the fines. And then there's the revenue opportunity of bolstering the revenue and efficiency. Because in efficiency, every bit of time that you can reallocate from wasted admin to performance and execution and sales, that's going to make a big difference.
The industry just continues to evolve, and I think advisors need to take security seriously and begin to look at ways they can implement different things within their their workflows.
If you're a big enough firm, you should have an innovation and technology implementation specialist in-house when possible, because that will continue to significantly increase the value of your business. But if not, there's lots of great consultants out there. Kelly Ferguson being one, Grant Hicks. There's been a lot of grants historically. Grants being the free money, not Grant Hicks. Where you can get free money from the government to get different companies to do reports for you. But there's a lot of missed opportunity on the efficiency, on the just making sure that you have the right data points in valuing what kind of communication consolidation can we have to protect ourselves from an audit, and what can we have to make sure that we're getting the most understanding of the value of the different relationships, both up and down. The enterprise is seeing the value of the BDMs and the communications they're having
Mm-hmm.
with all the people that they're supposed to be selling to, and the value that the people on the front line are getting from their communications from their MGAs and dealers, etc. So let's end this episode in highlighting that we are going to be having an upcoming episode that's going to focus on the basics of cybersecurity. We have a lot of companies, a lot of financial advisory firms across this country. I know some that are spending $200 per computer to make sure that everything is secure, and I know others that have done nothing at all in that regard. I'm going to bring a cybersecurity expert on in our next episode. They're going to be talking about some of those basics that you want to make sure to have. Some of them people that may have been running for the last decade and thinking that just having an antivirus for their computer is going to be enough for their company. And that's really not the era that we're living in. So we're going to talk about that in the next episode. We're going to talk about some of those basics. But for now, I would just leave with advisors that, and all financial professionals, that you need to be way more intentional. You want to, in the same way that you want to run your proper bookkeeping from day one and be CRA audit proof, you definitely want to be cybersecurity communications regulator audit proof. We are living in an era where, and especially right now, August 14th, that article came out across the SEC and many other regulators, many other channels, almost $400 million in fines is something to take very, very, very seriously. And we're going to continue to have a number of episodes that focus on that, highlight on that. So check out the next episodes that we'll have with some really great guests that will just go through the basics and then take us to the point where we can get robust in not just having those systems, but also helping nudge those systems to those greater entities within the enterprise level. Thanks for joining us.
92% of people trust referrals from people they know. But there's a better way to make those introductions. Wrap your arms around your client with your professional team. Join your client's team free today. PocketFinance.com.